So, as I am painting and doing other chores today, let's talk about something I get asked quite a lot. And the question is, should you actually buy a house in the outskirts of the city? Places like Ngong, you know them, prime plots at Ngong, Kibiko, Kitengela, Milimani areas. There's areas around Juja, Joska, Roiru, and the list goes on. So if your answer is yes, what are the benefits, challenges, and the financial obligations you need to undertake for you to secure your home? Thank you so much for showing me love in my last video on how I built my multi-story garden. If you haven't watched it, please spare some time and check it out. That has really encouraged me to create more. So if we are meeting for the first time, my name is Achieng and I call myself the Urban Homesteader. So welcome to my homestead. But before we do anything today, let me head over to that tree and enjoy some apple just as a reward for the hard work. Life in Nairobi or any major town is fast, expensive, noisy, and for many of us raising families or craving for a balance, it's starting to feel unsustainable. Most people are moving out because the cost of living has skyrocketed. The rent is so high and the space is tight. There's a lot of noise pollution and stress in the cities, and also the desire for nature and the serenity of rural living. I know of kids who have never touched soil, and the other day my kids teacher told me they had to start a farming club in school just to teach kids where their food comes from. And for the grown-ups, we just want a breather sometimes. And with most of us working remotely, we don't have to be in the city to earn anymore. So what's your reason of staying in the city? Let me know in the comment section below. As for me, urban homesteading is the sweet spot. So you're not fully rural, but you are out of the city madness. And with this comes space that you can use for growing your own food, maybe keep a few chickens, and you get to raise your kids in fresh air. In addition, you get to access the things you enjoy in the city, such as the schools, hospitals, and you can still access your work. The downside, as to every good thing, for me is this accessing the CBD, or if you need to do things in the city center, you have to travel a longer distance than most people, and you have to take care of many other things yourself. For example, you are no longer connected to the city sewage, so think of your own waste management and the water as well. So you either find someone who has a borehole or you dig it yourself. So really, as for me, there's always a trade-off to everything, and it's worth it. The way I look at it. So let's talk about financing your homestead. Can you afford it? Homesteading in Africa is not necessarily an expensive venture because most people have their ancestral homes, so they have free land to begin with. But when we are talking about urban homesteading, then we have to think about cost, because this is the piece of property that will be near an urban center and not necessarily your rural home. So it has some cost attached to it. So for the context of this conversation, let me go for a house that is not super expensive, because the goal here is for affordability, reliability, and access to. I'm going to work with a house that is under 10 million. To be precise, why don't you work with a figure of 9 million shillings and understand the cost that is involved and how you can finance it? So, as for me, I have a simple rule that I like to follow. I find it simple, straightforward, and does not require a lot of shenanigans. And this is the 75, 15, 10% rule. So, what this means, all your current expenses should be covered under the 75%. So if you have loans that you are repaying, maybe you have a car and you are still paying for it, it should be covered under the 75% of your income. This will involve your rent if you're staying somewhere right now. It will involve the cost of your food, other utility bills such as water, electricity, and things like that. And it should also be able to accommodate your mortgage repayment. So let's say you are paying 80,000 shillings a month or 100 shillings per month. the 75% of your income should include that monthly installments. Okay. So then the 15% minimum you invest. So the key is that this money works for you and ideally generating returns over time. So it's directed towards growing your wealth basically. And as you know, wealth is money that you don't use or money that you have not used. So if you investing in stocks, bonds, mutual funds, MMFs, SACCOs or your chamas, if you have a business venture or it can go towards your retirement account, for example, your pension or your personal retirement plans. And 10% is the minimum you save. This is for security and short term goals. For example, you can set an emergency fund of about 3 to 6 months of your expenses. Maybe you can save, you want to buy you are saving for school fees or for your car and things like that. So this is money that will make sure in case of unforeseen eventualities or maybe you lose your job, you are covered for a certain period of time. Owning a home is a very emotional has a very emotional aspect to it, but I believe it should be a strategic move because first of all, if you're able to pay off your house in cash, this is better for you and still have money to do other things because you have to consider the opportunity cost, the missed opportunities you can have by paying cash. So if there is nothing to worry about and you can afford it, then by all means this is the best way to own a home. But if you must finance your house, then you have to think deeply and carefully about this. The first place to go is the Kenya Mortgage Refinance Company, and this is an incentive by the government for first time homeowners. They have an affordable housing plan where for houses that are less than 10.5 million, you get a single digit interest rate. So this is a really good way to finance your home. So that is the first place to check. I will link their website in the description below. The second way is to get a commercial loan. And the moment you're going commercial, we are talking about interest rates of about, right now, I think it's about 12 to 14. But I think there was a time it shot to even 17% because it's subjected to market rates and these can change. You have to consider this carefully. And before you even get the loan, I want us to talk about the deposit. After the bank has checked or your financier has checked and confirmed that you're able to repay, they'll require a 10% deposit. Please, please, please don't borrow this money. Ensure that you've been saving up for it and have it. So we said the cost of a house is 9 million Kenyan shillings, and 10% of 9 million is 900,000 Kenyan shillings. So that is the first step. So make sure you have the deposit and we are not borrowing this deposit for whatever reason. So once you pay this deposit and they're processing your mortgage, there are few things that there are some hidden charges associated directly with the mortgage that it is you who have to incur. So in addition to the interest rate that you're going to pay the bank, you also have to incur certain costs to be able to get this mortgage. Hidden cost number one is the valuation fee. Before you get processed for the mortgage, they have to send a surveyor to come to your site and check if your purchase price and the market value of that property is in alignment. And you'll part with between 30 to 80,000 Kenyan shillings. The bank usually have a database of professionals that you can choose from. My advice will be always negotiate for these prices and don't just pay the price that is quoted for you. This will help you a long way in saving some of these costs. Hidden charge number two is the legal fees. The legal fees will cost you 1.5% of the purchase price. And as usual, I said always negotiate for this price, and this will offset you around between, let's just say, between 80,000 to 150,000, depending on the law firm. So these fees will take care of the legal matters. So the law firm will go to the land registry and make sure the title deed is correct and the contract you have between you and the buyer binding and things like that. They'll take care of the legal matters. And this will cost you between 100,000. Let's just put it between 80,000 on the very lower end to about 150 or even 200,000 on the highest. And it depends on you. This is your preference. So if you want to go to the expensive law firm and things like that, that's up to you. But there's a lot of factors. Maybe reputation and how you feel about the law firm should also matter, not just the cost. On the flip side, please do these searches yourself. As much as the law firm will do it for the bank, also do it for your own sake. Go and check the title and also the green card. And this is the most important document that you should lay your hands on. This document will give you an history of the land. If it has some caution, that is if somebody borrowed against it, and it will also tell you if there are issues with that land, maybe legal issues and things like that. So make sure and don't say you don't have time, because you are investing in a long-term project. Make sure you have time to support this venture. And always negotiate for these prices. If the lawyer tells you it's 200,000, I just tell them, oh, kuna 120,000. Most of the time, they just settle, as in it's business also. Hidden charge number 3 is the stamp duty. Stamp duty is the tax that is associated with the property that you buy. So when you're buying in an urban area, it's 4%, and when you're buying in a rural area, it will be 2%. So it will be 4% of the purchase price or the market price, whichever is higher. What this means is, let's say you purchased a property for 9 million and the market price is 10 million. So you pay the 4% on the 10 million and not 9 million. Hidden charge number 4 is the mortgage insurance. So the bank will always protect themselves against liability. So when you lose your income or in case of death, they need to make sure they recover their money. So this will cost you about 30,000 to 40,000 per year over the life of so let's calculate how much money you need to have your mortgage. So the first 10% will be around 900,000, and then we are going to get a mortgage of 8.1 million. Out of these, we'll need the valuation fee at 30,000 shillings, and then there's the legal fees at 100,000 shillings, and then we have the stamp duty at 4% will be 360,000, insurance fees which will cost you about 30,000. In total, this should come to about 1.425 million. Congratulations, you are now a new homestead owner, and all the best in this journey. But there are other considerations you have to make. For example, if you bought either a freehold or a leasehold property, and based on the zoning, whether it's in an urban setup or it's in a rural, it's zoned as a rural place. So the rates, if you have leasehold, of course you'll pay the rent, and when you have freehold, you'll pay the rates depending on where your homestead is located. So the other cost you have to think about, maybe the cost of moving out. Most people don't even factor that in. Once you get into your property, is it properly fenced? Are you feeling secure? Do you need to install security lights or the security cameras? Do you need to connect the meter? There's some renovations that needs to be done. For example, maybe you need to change the paint, or maybe some fixtures in your house that are not just working quite well. So these are things that you have to consider. If you want to start homesteading, you consider the cost of maybe purchasing things like seeds and gardening tools. So I believe you should be able to enjoy your new home despite this financial burden. Is buying an urban homestead a liability? Yes, it's a liability, but one that comes with lifestyle benefits, such as the house can give you the space to grow your own food and avoid rent, raise your family in peace, and maybe even earn a little from the land. Then you are not just spending, you are redirecting money into something that pays you back in lifestyle, freedom, and long-term value. In addition, your property also appreciates over time. So, yeah, it's not for everyone. But if you've been thinking about trading that city life for a little more space, maybe it's time to ask yourself, is it worth the long-term hassle? Let me know. Will you take a mortgage for a place outside the city and start your urban homestead today?